Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, we had another really great day on the Nasdaq, up 26 points there. Russell also putting on some nice gains. We had the Dow somewhat negative, S&P somewhat positive. But folks, other than that, we have a lot of these indices, actually Nasdaq up into new all-time highs, and all the other indices here chomping at the bit, trying to get up and over some resistance levels. We'll see all of that in the charts. We had the crude kind of just backing and filling on the day. The bonds coming off, as we've been mentioning, still a bit of some structural issues with the bonds. And then the gold's kind of battling out right around the 1200s as we've been mentioning. So we'll see all of these on the charts, and as always, starting off our analysis with the S&P 500s. So folks, there we are on today, and we had mentioned on our prior review video how while we did see volatility in the market coming in and some piercing of some potential like just really short-term support levels, how actually the close that we saw, a very positive close, kind of put a little bit more of a bullish posture, a bullish stance on the market here. And so if we zoom into the intradays here, we can see that we're still kind of setting up right here, trying to maybe get up and over these 2280s on the S&P 500s. Folks, as I look at this chart, really this is kind of the range that we're forming here, a little bit of almost like a flat base over the last 3 weeks or so on the S&P 500s, 4 weeks really on the S&P 500s. So really the place that I'm going to be looking for is a breakout up and over the 2280s, and just like when we broke out up and over the 2215s earlier or I should say in the latter part of 2016, when we started to break up and over those 2215s, one of the things that we need to be cognizant of here is that we don't pull back down underneath the 2280s. So in the case that you break up and over this 2280s, the resistance levels, we have to maintain those levels, right? What we don't want to do is break out and then immediately fail right back down. That's not a good sign. It kind of indicates some lack of buyers up and over these resistance levels. So S&P is still chomping at the bit to try and make new highs, but folks, to take a look at the Nasdaq's got up and over into new all-time highs, up and through the 5550s, looking like it's trying to tag the 5600s. Ever since that got through the 5500s here, that looks pretty good as well. And one of the things we've been noticing about the Nasdaq is that the relative strength has been coming back. So that's something that I've been pointing out to our Easy Trading members and also to the people who are watching these market trend reviews. And one of the things that I had made mention of is we had started spotting this strength in the Nasdaq very early on when the really big cap stocks like the Amazon started to take out some balancing areas. Remember, we were talking about how they're forming sort of the bottoms of potential bases, and if they started to break out of those resistance levels, those could be an attempt at forming the right side of a base. If you're familiar with like the cup and handle chart formation, this would be the right side of that base that they're forming. And we're saying that as these big cap stocks form the right sides of the bases, this would probably allow the Nasdaq to regain some of that relative strength, which is exactly what it's done. So Amazon has had actually a nice move above those resistance levels. Look at Facebook. Facebook, same thing. We were mentioning right above like these 122s, up above the 50-day and the 200-day moving averages, that this would be a place that traders would be watching. Look at that, forming this beautiful right side of the base as well. And then earlier we were mentioning how, Apple to some degree was starting to break out of this, area. That was a cup and handle. That added to some of the strength in the Nasdaq. Alphabet was doing the same thing, right? Breaking out of this cup and handle. That's been doing very well. So as we take a look at these stocks, folks, these big cap tech names, they are starting to exude some leadership at this time, exhibit some leadership, even like the Netflix as well, right? Big volume day on Friday, breaking up. I think this is actually, yeah, it did get up into new all-time highs, 133.93s on big volume. Just be careful because this is reporting earnings in a few days, and we know that earnings tends to be a very volatile period. So this is what we're seeing, some strength returning back into the Nasdaq. We are seeing all the other majors, the Russell, the Dow, and the S&P still trying to go for new all-time highs, but the Nasdaq up and out of the chute leading the way. As we move over to the crude, folks, taking a look at the crude markets, just backing and filling, we've been basically mentioning how it seems like there's a bit of a balance between the 54s and the 51 evens on the crude, so watch for a break up and over or down below on either of those levels. Taking a look at the bonds here, bonds kind of backing off on the day here, and this is an intraday chart here, or I should say an hourly chart, and you can see how when we sold off, we came right into these prior lows, and this red line actually goes all the way back to 2013, and this is where we found some support bouncing. But I think there's a lot of factors, just structurally, economic policy, or I should say monetary policy, has shifted here from a very easy monetary policy to maybe a little bit of tightening. That's going to ultimately put pressure on the bonds to the downside. So any break below 123s, I think, continues this downtrend we've established in the 10-year futures. And then finally, taking a look at the golds, we're hanging out right near those 1200s. Notice how we backed up. So we came right up to it, overshot just by a little bit, kind of just kissed it and backed off. And folks, now we're trading down below this 1200. So I think we need some balancing sideways time right in this area before we get any clearer picture of what gold does. Now, as far as stocks go today, folks, we had some great trades, continuation of some of our leading stock trades here. You know, we've had the HQI. We've enjoyed a nice run on that so far. Another one was Shopify that we had. AERI, look at this breakout right over the last couple of days. And even some of the day trades that we've taken over the last few days. This MXL was on our daily stock picks list right here. Took this as a day trade. Look at that, continuing a great move. We also had this PRI. We had a nice day trade on this as well. This was getting up and over, actually gapped up and over our buy points here. But look at this. Look at this is why you need to understand how charts work and how to place your buy stops. Because even though you might have missed this on the gap up, it just gapped up and just ripped first thing in the morning. Look, if you just tracked it for another good hour, it gives you another setup right through here. This is exactly the place that we took this in our trading room. This yielded a nice, great day trade. Folks, you've got to understand these chart patterns and know how to pick your buy points based upon support and resistance. And if you don't, hey, we actually have open houses to our trading room. So definitely sign up on the emails down below. That will allow you to see the next time we have an open house. And please join us. We'd love to have you. But folks, we continue to see breakouts that are working. And even though some of the breakouts have been volatile, some of the breakouts have just stopped us out a day or two later, even sometimes on the same day. This is why we have sell rules and we have risk management control, right? This is all what allows us to be successful as traders in the long run. Folks, this is what we focus on in addition to buying the best relative strength stocks, breaking out of chart patterns with heavy volume. But other than that, folks, hey, just wishing everyone a great trading day ahead. Hope you guys had a great Martin Luther King weekend, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about easy breakouts, go ahead and click that show more right above the comments section to find out more about easy breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.